Bet y'all weren't expecting this. So I am on a cruise right now, on vacation, and I guess it's a good way to kind of keep my mind off of the fact that I am down 100 grand. Yeah, 100 grand now. So I didn't want to think about it, but this is definitely helping out. It is Monday, February 2nd, 2026, and I am officially down 100K from all-time highs. Can you believe it? It was, I think, last year, April, the whole tariff craziness, Liberation Day. I went from 170 something, almost 180, all the way down to 80. So that was like my first experience being down 100K. So now that this is like my second experience being down 100K, and I'm going from 305 down to 205, it's not that big of a deal. I mean, it is a big deal because, I'm still somewhat young. 100K is a lot of money to me, and that could have went towards, a new car, down payment on a house, paying off every debt that I have, including margin, right? So margin, any loans, student loans, whatever, personal loans. I don't have any, but I'm just listing it off. That could have went towards paying it all off, but instead I decided to stick through Robinhood. And even though I knew Robinhood was going to see some cool down period, my covered calls were unfortunately not enough. If any of you guys are long-term viewers of the channel, you'll know that, at one point, I think I made a little over 3 grand, or maybe it was 5 grand, somewhere around there on covered calls it was 5 grand. 5 grand on covered calls for Robinhood and option premiums. So I think my entire investment into Robinhood back when it was like $10 a share was 15K. So I mean, at 1,500 shares, it makes sense. $10 a share, so about 15K. I pull 5 grand of that out through option premiums, so I'm only at like 100, or not 100, but a 10K cost basis, right? And that I think that's around like $7 a share is my average in Robinhood now after all those profits. But yeah, so my all-time chart is not looking as good as it once was. This is what I was talking about, me being down 100K the first time. It was back in March, April area. So hopefully it does not get all the way down to 165, but anything can happen. I'm still up the past year though, 52.9%. Year to date, I am down 16.73. So I am probably underperforming a lot of you guys. I'm underperforming the market. It seems like SPY is and QQQ is near all-time highs right now, so definitely underperforming. Underperforming gold and silver probably. Actually, I don't know. It's been down a lot, so I'm not really sure yet. But 3 months is 30%. 1 month is 15.22. Past week 13%. And today, of course, I am down 5.77%. Now, if any of you guys noticed, my VFC covered call is officially expired worthless. So it was only like 22 bucks, but hey, I only put a little bit of money into VFC, and I think my dividend yield on cost, so my cost basis with my dividend income, is around like 3% right now. So it's not the worst investment in the world. I am up on my VFC position too, so that went well. Palantir has been beaten down a lot lately. Same thing with Robinhood and crypto. So my 2 covered calls seem like they've been doing really good, but keep in mind these were like deep in the money. So I did have to roll it over a bunch of times. So it looks like my 165 strike will expire worthless as of right now. It's only 400 bucks left in value of the contract. So I'll just stick through it. I mean, it's only in a couple weeks. I do have this 100 strike though. Most likely I will let this baby go. Unless it's profitable to roll this one out. Let's see. Doing this live for y'all. Let's go with another Oh, ETH is up 10%, but that's not really saying much because it's all the way back down to 2 grand. So, I mean, it's only 72 if I roll this baby out. So it's not much money. If I roll it out a little bit more, it'll probably just be $100 of credit. So I think I can do a lot better than that in some other stocks, and to just basically get rid of half of my Palantir position. It's been a good ride for me. And, you know, Palantir, I'm sure will still be around 5 years from now, 10 years from now. But I just want to stick with my 165 strike from now. But we have Sprouts Farmers Market. Let's see what this would be if I roll this baby out. Let's see. Let's go with June. Let's go, what is it, 80? So 80. I could also roll it down to 75. So I would pull 500 in cash out of my my collateral. So I would pull 500, but also give up $10. So I might go with that. I'm not sure yet, but it is an option. Let's go with March maybe. So March, not really much here, but Sprouts, I may consider the 75, but we'll see the closer we get to expiration. And then of course my Nike, this one's next month though. Let's see what this would be if I rolled it out. Just roll it out to April. So I would have to roll it at the same strike. Let's go with May. Yeah, so not really much there. I might just let this one assign, unless, you know, my premiums start going up, that spread that I would collect goes up, and it would be a profitable trade for me, or lucrative trade. Then I will roll that Nike out. But so far it seems like I'm only going to roll my 165 Palantir and my 80 Sprouts, and probably just to roll down that Sprouts to 75. And then Palantir, I might roll it up. Let's see what that would be. So instead of March, I'm going to go, actually, let's see what March is looking like. If I roll this baby, so if I roll it up to 170, just in case Palantir starts to climb back up, that would be an extra $160, and it would be at a higher strike. So this would be an interesting trade, and a trade that I would be interested in. If I just roll it at the same strike, it would be 300. So, you know, I'll just decide the closer we get to it if I want 300 or 150, but at a higher strike. Yeah, we'll just see. It is my last 100 shares of Palantir, so I'm leaning more towards rolling it up to 170. So I might go with that instead, because I kind of want that to expire worthless. Also, if my Palantir 165 ends up expiring worthless, I may just go with that as well, because there won't be that much equity left that I have in Palantir, not a whole lot of risk left. All of my principal has been collected through option premiums and just trades in general. So my cost basis is literally nothing. I basically got paid to hold Palantir. So right now, instead of me paying money to invest in Palantir, I think I'm in the green by like 2 grand. So Palantir has been very lucrative for me. So I think I will separate myself from half of it, just because that 100 doesn't really make sense right now. And then that 165, the closer we get to it, I will either roll it upwards to 170, or I will just let it expire worthless and just finish my Palantir rolling scheme that I've been doing. And then Sprouts, I will roll that down to 175, as long as it is still lucrative to do so. And Nike, I don't think it will be lucrative to keep rolling that one, so I will probably just buy it. And then my net margin option collateral, if I let the Palantir and Nike both assign, it'll be about a 3 grand difference. So my margin in option collateral will go down by 3 grand. But crypto has also been beaten down a lot. I think I bought ETH recently just for a trade at around 3 grand. So it has not worked out very much for me. It is what it is, though. Crypto, man, it's the volatility you got to deal with in crypto, which is why I keep it to less than 1% of my portfolio, and I'm only doing it as trades. So, for example, if any of you guys haven't caught my last videos, you'll know that I just put like $1,000 or a couple $100 into crypto, let it pump a little bit, then I'll pull out my principal and take my profits and stick it into staking. So I'll just be collecting an interest on that, basically on my profits. That's what I've been doing, but obviously crypto has been down, so equity wise I am down on my crypto position. Look at my top 10 positions. It looks a little bit different. If any of you guys are long-term viewers, Robinhood is down 8.3% today. That is crazy. With all of the good news that we've heard recently with the Trump accounts, with just everything in general. They're just constantly pumping out new features, new products. They announced that they're going to be paying an interest on their option collateral, so that would attract a little bit more like higher account balance traders, but they just can't seem to catch a break. Nike is still my number 2 position. Pepsi, Palantir just catching a little dead cat bounce today, just because it's been going down so much. We have REPX that has basically done nothing for a very long time. I'm only down 4% now though, so I am in the green if you take into account all of my dividends, but it has not worked out the way I thought it would with all this craziness with energy, the snowstorm, everything going on overseas with global tensions. Has not worked out the way I thought it would, but it's still profitable to hold just because the dividend is higher than my margin payment. So it's just kind of hovering there in my top 5 position. I do want to bump it down though, not from selling the actual stock, but from investing more into American Express and all these other companies. But SoFi also down 1.5%. Honest catching a little baby pump, but most likely a dead cat bounce, just like Palantir. We have MAA not doing anything today as usual. American Express did go down on earnings, so I was not able to cash out profitably, but it is what it is. And then PayPal, of course, not doing anything as usual. But Robinhood is actually at $90 a share right now. And if I am not your financial advisor, all right, and this is not financial advice, but if I were somebody that missed out on the ride with Robinhood, right, I was not the one that bought it at $10 a share, $8 a share, or $30 a share when it had that first really bad correction. I would highly consider starting a position at 90 if I was that person, right? But obviously, I have 1,500 shares at a cost basis of $7, and Robinhood is more than half of my net worth, so I'm not as excited to put more money into it. But like I said, if I had 0 shares in Robinhood right now, then I would definitely at least consider it at 90. And Nike, of course, right now is just 61, but I fully expect it to be 70, 80, and then eventually 100. And then once it passes that 100 mark, I'll start selling a little bit of covered calls, maybe 1 or 2, but nothing more than that. I really want a long-term position in Nike. Pepsi, it's at 150, but I think it'll easily go back up to 175 in the future, though. Right? It's a slow-moving stock, so it's not going to happen overnight, but when it gets to that 175 area, maybe even go for all-time highs, I will look into covered calls. And then you guys already know how I feel about Palantir, RPX, same thing. SoFi, 22.50. I know a lot of people were also playing SoFi for earnings, and trust me, even though I didn't have a trading position on SoFi for earnings, I still know how you feel. Because we'll get to my second account in just a moment. But Yeah, unfortunately, SoFi is only 22.50 right now, but I still think it's a $40 stock in the future. And then, of course, Honest just being a disappointment as usual. MAA not doing anything as usual. But American Express at 350 or 352. I thought they were going to have a pump on earnings, so I put a little bit into it, but I do want to build this up while it's at the 350 area. Let me see, what is all-time highs for? So it looks like 385 is around all-time highs for American Express. I might just build a position slowly into American Express, probably closer to earnings seasons, just so I can catch a little pump short term. So a lot of stocks here doing good, but they are very small positions for me, so it doesn't help out too much. VFC just being volatile as usual, so I am up 63% on my VFC, but I also collected dividend and some option premiums along the way. All right, so now we get to my second account, Grievous. This is like my more trading account. I just like to fool around in this one, honestly. And the idea behind it is to collect equity over time, or scalp equity over time, and just place some trades that I probably wouldn't do in my main account, or I just don't want in my main account. But I am down a little bit, but basically break even. If we take a look at my positions, let's go with, yeah, so Disney is down 5% after earnings. I'm most likely going to buy more. NASDAQ not doing anything, down a little bit after earnings. So I made a play on Hess too, midstream, but unfortunately didn't do anything. GME is up for me. It's up 7% today. So if any of you guys don't know yet, I did start a little position in GameStop, and I guess I should have put more into it because it would have kept up my account. But yeah, so far, the only win I have in this account is Meta. That 0.17 shares of Meta is pure profit. If any of you guys did not see my last video, I just made an earnings trade on it, and Meta is basically the reason why my account is still break even. So my one winner is carrying my entire portfolio in that account. But Roth IRA is still 1,800, not doing anything as usual. I bought like a little bit of a leveraged GME. Where is that, baby? Yeah, so a little bit, just throwing a couple bucks here and there for a GameStop leveraged. So hopefully GameStop has a little pump. Now, I don't remember where we last left off when it comes to my transaction history update, but I did buy a little bit of Netflix. If you guys didn't, you already know. I did buy some more American Express. My VFC, of course, expired. I collected my rent. I like calling it rent because MAA is a REIT, and I only have it for the dividend. So I just like calling it rent. And now there was a trade, though, that I made that I probably should have put a lot more into, which is Luther, whatever you want to call it. This was the Will Luther win Record of the Year at the 68th Annual Grammy Awards. And I guess they won. I did not watch the Grammys, but I guess they won. And I only put like 40 something cents into it. So I put 40 cents into it. I made 54 cents. So I guess I should have put more into it. But it was just a fun little event contract that I like to do. I don't like to gamble because, I just like to focus on stocks. But maybe I'll play a little bit more when it comes to these types of stuff, especially when I feel like I have like a more social edge, if that makes any sense. Like, I don't know why it was only trading at like 40 something cents when just looking at that list, I guess, I don't want to say it was obvious, but I thought there was a higher probability that Luther would win at least. But it is what it is. Just a little small win for me. And if you guys don't yet already know, I do have an X account that you guys can follow. But I made a couple posts here recently about Robinhood and me being down 100K from all-time highs. It's under 100 billion market cap now, I believe. And I think Robinhood will at least be a $300 billion company, if not a 500 billion, right? Half a trillion. And if they perform very well, then we could possibly see Robinhood joining the $1 Trillion Boys Club, but that's like BlackRock level, right? Obviously, Robinhood is not BlackRock level yet, but I think they at least should be a $300 billion company in the near future. So maybe an easy 3x, 2x from here. And then we have this post that I made when it comes to how much money I made in the month of January 2026. This is branching off of my post that I like to do in on my X account, just updating you guys on my dividend and trading income. Last year I made around 11K in dividends and option premiums. So there it is right there. Follow it on my Google spreadsheets, right? And when you look at how much I made in 2026 for dividends, we're off to a great start. So going from 2024 to 2025, it was almost a 10x. And then going into 2026, it's almost a 2x. So I'm still growing my income very well. And when it comes to trading, I made about $338, dividends $486, and then I had to pay my margin interest, so I made about $532 this month. And the reason why I had to take pictures like this is because I am on a cruise right now, as I've said. So the Wi-Fi is only connected to one of my devices, and I usually update my spreadsheets on either my Mac or my computer because it's a little bit more difficult on mobile and you're limited in features. So I just had to take a picture like this, but honestly, this is kind of a vibe here. All right, now we get to your guys' comments on my previous videos. Not a whole lot that I've been getting recently, but we got 43 quick saying good video. You got to make sure you have spell check on next time, brother. But we got Crispy Tendy saying, did the dust remain after you reactivated your crypto account? And the answer is no. When I originally shut down my crypto account because I just didn't want to look at that ugly chart. Ugly as in the flat lines, right? Not ugly as in I lost money. I didn't lose any money. But it was like it would always flatline around the peaks and valleys, right? Because it would try to combine the crypto time frame with my stock market time frame. So I didn't like that chart. I'm a little bit autistic, so I just wanted to shut down my crypto account that only had a little bit of crypto dust in it. So they took off that. But when I reactivated it to start placing trades again and to stake, I don't think they gave me back my original dust. And it's not like it makes a difference because crypto dust is usually, less than a penny. It's not even worth the time that you spend on it. So it is what it is. I don't even want that crap anyway. But yeah, I hope that answers your question, Crispy Tendy.